Have you ever wondered how your mortgage interest rate affect your buying power and your mortgage payment? You may have seen rates advertised at 3.99 to 4.99 to 6% to 7% all over the place. But what does that really mean to you as a buyer or a potential seller in the market that's looking to buy or sell real estate in the future? So if that is a question, if that's something that you've always been wondering, this is the episode for you. So, once again, I'm LaShawn Abraham, and let's just get into it, guys. So, when it comes to interest rates and just the I call it the volatility of how rates change.
Mhm.
Often rates actually change daily. I don't know if people knew that. And really, what changes with interest rate is really the pricing of the market, just depending on what's going on in the economy. But what the average buyer and or consumer may not realize is that that change in interest rate can truly affect how much of a house they can buy because it impacts their mortgage payment. And so that's something that we're going to talk about today. So, guys, what do y'all think? Have you ever had someone? I don't know how often you get asked those questions, Woman, about rate. I guess when you meet with the new buyer, or even do your sellers even ask about rates? Is that kind of a deciding factor for them when they're thinking about listing their home or not?
You know what? Now that I think about it, I had this conversation yesterday when I was at Nat Cancun Alterations and Tailoring, and I just want to do a little plug in for them. They are such a great company, a husband and wife duo. Omar is the tailor, and he just, I mean, he handles all my suits and everything. This is not a sponsor, okay? Just want to just plug a great small business into Teach Me Tuesday, but yes, we had this conversation, man, about interest rates. What are interest rates? When are they going to go down? And I always try to explain to people, they fluctuate, but right now, they're kind of holding steady,
Yeah, yeah.
up there around I think around the
They're
seven.
between yeah, they're
Yeah,
between
six,
6 and 7% right now. Yeah.
yeah. So, and it's some it's a pro and con at the same time. You know what I'm saying? It's like there's some pros to it being where it's at, and there's some cons to
Yeah.
where it's at as well. So
Mhm.
yeah.
Yeah, I mean we're in a stabilized kind of market right now when it comes to interest rates.
Hmm.
Rates aren't significantly high, and they're not significantly low. We're not in a period to where we were, a few years back, beginning of COVID, to where rates were just extremely low.
Right.
Um, and for those who were first time home buyers or a first time shoppers and things of that sort during that period, rates of today are somewhat of a shock,
Right.
because that's what they experienced. They experienced rates in the low twos. I mean, the high twos, low threes, and now they're sitting on all this equity. And you may be thinking about, oh, I want to buy a new house. It's been 3, 4, 5 years. I want to
Hmm.
purchase again, or I want to do something different. I want to refinance. But man, I got a 3% interest rate. I don't want no 6 or 7% interest rate now.
Right.
But in all honesty, that's where the market has stabilized at. We've been 6 to 7%, and prior to the big decrease that we saw, prior to COVID or whatnot, um, we that's where the market was in those 5 to 7% range,
So
prior to all of this.
So, Gavin, let me say this. Let me just break it all the way down for some people that out there might be watching about, that might not know anything about interest rates. But and so rising interest rates, what it reduces affordability, right?
Mm-hmm.
Lower interest rates increases affordability. So you think about it like this: rising interest rates make your monthly payments go up. Okay.
Right. Yeah.
And lower interest rates make your monthly payments go down. Okay,
Yep.
just to break it all the way down for those of you that trying to understand this language about interest rates. So,
Yeah, and honestly, that's really the biggest thing. Honestly, I think
right.
I do get, if I'm being completely honest, I get a little annoyed when someone calls me rate shopping me, asking me, what's your rate? What's your rate? And I'm like, why? Why? Do you really want to know what your rate is? Or do you really want to know what your payment is? Let's just stay, because
What's your
that's honestly
budget?
what it
What
is.
is your budget?
That's what it is. They want to know, where would my payment be with this
Right.
lender versus another lender if I
Hmm.
chose to go here versus there, because that's ultimately what people want to know is their monthly payment and not necessarily the rate. Don't get me wrong, there are some very savvy buyers out there that are really looking at the interest and how it accrues over the life of the loan. But for your
Hmm.
average first time home buyer, they're really more so concerned about their payment. And Wilmot, you're absolutely correct in regards to, the higher the rate, the higher your payment, the lower,
Right.
your the amount that you're eligible for, and vice versa. The lower the rate, lower the payment, the more buying power you have to purchase a home. But what we're going to talk about today is also some strategies on how you can get the best rate. One of the biggest pieces of advice I like to give to people when they're thinking about, purchasing a home, and you really do want to pay attention to the rate and things like that, but you really want to make sure that you're comparing apples to apples,
Mm.
because any lender can quote you a rate. I can say, yeah, our rate today, is 5%. But that 5% could be on a 15-year term and not a 30-year, right? That 5% could also be including a temporary buy down or not, so,
Hmm.
or it could be an FHA loan versus conventional loan. So you really want to make sure that you are asking a little bit more questions or getting something called a loan estimate from that lender, or either some kind of rate quote in writing that breaks out, the loan program type, the fees, things like that as well, so that you can really make sure you're comparing apples to apples and not just hearing whatever low rate someone's saying to you and is taking that as like, this is my rate.
Yeah,
Right.
but so I guess with that being said, I mean, let's talk about, I guess, what kind of dictates, the rate that you get, right?
Mhm.
I think, most importantly, first of all, it's going to be your credit, right?
Yeah.
The,
Mm-hmm.
the lower your credit score, the higher cost it's going to be for the rate that you get.
Yeah.
And then for, the higher credit score that you have, the cheaper that rate is going to be.
Mm.
Because guys, you can, in terms of interest rate, let's say, like we said, it's ranging between 6 and 7%, and that's dependent upon what you're paying for that rate. You can get to what I refer to as a par rate for you individually, to where you don't have to pay anything for that interest rate, and then if you want to lower interest rate, then it's called a buy down,
Mm.
to where you're paying points, or you're paying a certain percentage of money to
Mm-hmm.
get a lower rate that you're wanting. Um,
Mm.
so yes, I mean, you got to take into consideration. So improving your credit score is always going to be key to lowering the pricing for the rate that you want or you desire for your loan. Um,
So let's go back to what you said, because I thought that was really important when you was like, what kind of dictates, how low that rate can be. So credit score is one of those pieces, but there also are other pieces to that as well. Another factor in there is loan program, because once again, if you're doing a conventional loan versus FHA versus VA versus a loan with down payment assistance, those rates vary across the board depending on the loan program type. Also, depending on how much money you're putting down, which I know everybody wants a deal and wants to put down as little as possible, but the least amount of money that you put down, the higher your interest rate, because it's more riskier to a lender when you're borrowing more money versus less money. So
right.
rates tend to be higher on down payment assistance, on loan programs where you're only putting down the bare minimum, the 3 and 3.5%, versus someone putting down 10, 20%, they will get a better interest rate. So I don't think a lot of people know that. So I think that's something good to point out to you guys as well.
That's good. That's good. So let me ask you a question, LaShawn, Gavin. If I'm an investor, right?
Mhm.
Um, are their rates similar to the rates of a first time home buyer,
Mhm.
or are their rates higher or lower? What can you advise on that?
Yeah, I mean, that's a great question. I'm glad you asked that because it's not because I work with a good bit of investors,
Mhm.
and they get a little, a little ticked off because of course they want, the better payment, they want to get a deal because they're trying to,
Right.
calculate their cash flow and things like that. But in all honesty, it's the opposite. For investors, those loans are for a lender, those loans are a lot more riskier because it's not your primary residence. It's
Right.
someone else that you're kind of depending on to kind of help make those payments and things like that. So because of that, they charge you, they being the lender, the rates are higher. You won't tend to find the best rates on investment property loans or anything called like a DSCR loan, which stands for debt service coverage ratio loans. Those rates are higher. Those rates start off 7, 8, 9, 10% or
Wow.
higher. They require a bigger down payment because it's not your primary residence. And the more
Makes sense.
properties you own, then you tend to have to pay higher in interest rates as well. So, yeah.
Gotcha. Makes sense.
So good stuff. So going into our next bullet points, we talked about, Gavin mentioned, paying down, improving your credit score by paying down debt, things like that. I've mentioned about the down payment as well, because the down payment does help save you on rate. And then, even though I don't like it, I strongly encourage people to shop around, just because shopping around can help you leverage a better deal. I definitely remember for us, Gavin, when we were purchasing our investment property, that's what we did. We shopped around. I leveraged a rate that Rocket Mortgage quoted us and tuck that rate to another lender, like, hey, can you match or beat this rate? And if they want our business, they're gonna match or beat our rate, and we got it, got it
Mm.
down lower or whatever.
Mm.
So sometimes you can do that. You can kind of leverage, lenders in that way by getting something in writing and then going to another lender to see if they'll match it. I think that's a great strategy that people can take in order.
Yeah, but let's that's a strategy for when you're not working with the Abrahams.
Yeah.
let's add that out there.
Don't shop us, shop everybody else.
Yeah, shop everybody else. And we just keeping it real, 100.
Yeah.
Gotcha.
But no, that's good stuff. Yeah, definitely shop around, man. You want to know your options, and it's your own duty to yourself to see, to figure out what's the best options for you and what's the best deal that you can get. And then once after you shop around, man, and you see that, hey, you're comparing apples to apples, and you're ready to make a decision, it's time to lock that rate in. You want to do that. You want to lock your rate in early sometimes to avoid. It's like a protection to avoid validity in the market. So if you see in the market to where things are going on, there can be the brink of war can happen. Any, things that you may not know specifically that can influence the volatility of the market, real estate market. But you have just a common sense idea that, well, rates are lower than they were a few months ago. Maybe I should go ahead and lock in so I don't have to worry about rates going up, or I'm fine with my monthly payment and the pricing for the rate where it is today. I don't want to risk having to pay more tomorrow or the next week. So man, locking in that interest rate early definitely will help avoid you from having to pay more down the road because of market validity. Something changes in the market and causes rates to go up.
Yeah,
Right.
and I would say that this is. Oh, go ahead.
No, go ahead, Slow.
I would say this is extremely important, especially for those people who are maybe considering new construction
Yeah.
and the house is not built yet. If the house is already finished, and yeah, most lenders would recommend that you lock your rate in within 30, no more than 60 days of closing. But if you are under contract and it's going to take 3, 6, 12 months to build your house and that rate isn't locked in, you want to make sure that you have a strategy in place to lock your rate in, because I've seen where people who was building a house, they didn't lock their rate, or either the builder or lender, didn't allow them to lock their rate yet, and the market moved in a course of 6-7 months, and it moved in their favor. It moved where rates went up because it can impact how you qualify, it can impact how much money you have to bring to closing, all kinds of stuff. So one of the other strategies that I would tell people to do is you can sign up for like rate alerts and things like that. Like I have an app on my phone, which is mortgage news daily, but there's all kind of mortgage apps or different rate apps that you can have, and it can kind of alert you. It can send you a text message or an email daily to let you know what the market is doing. You can log into, Google or Yahoo Finance, anything like that, and kind of see where rates are. But just kind of do your due diligence, as Gavin mentioned, to just stay abreast of where the market is so that you can make sure you're making the best financial decisions for you and your family. But one thing I would definitely say is, even though we're saying all this, once again, when it goes back to making sure that we're really comparing apples to apples, when it comes to like rate shopping, buying down points and things like that, those are more so allowed and more applicable to what I consider or what I call like your traditional loans. So those are like your standard conventional FHA, VA, USDA loans. This is not applicable for what I call people who want to program, right? So if you're looking for down payment assistance, if you're trying to go through a NACA or USDA Direct or these specialized programs that's giving you some type of assistance, majority of those programs do not allow you to buy the rate down. You can't choose your rate. They have a standard rate. So these things are not applicable to certain programs. So you really want to make sure that you understand the program versus what your goal is if you're trying to get a lower rate, because some of those programs won't allow you to do that.
Great point. No, you was about to say, jump in there. Go ahead.
I was just gonna comment. I like what y'all said about comparing apples to apples. I remember we had a situation like that with a client, and I guess that broker promised that client something else, and when y'all were able to kind of put things side by side and show the client that, hey, this has XYZ, ours has XYZ, she actually made a decision to go with you guys after you were able to explain, comparing apples to apples, not oranges to apples. So so definitely, guys, if you're out there rate shopping, you want to know, and you think one lender is giving you a better deal, you definitely want to make sure you know all the details pertaining to that loan, so that you know that, hey, you're getting the best bang for your buck. There might be some additional fees somewhere you don't see. There might be some, additional closing costs added in there somehow, and you think you got a better deal on this side, but you might not. So it's good to go with a lender that you can trust, so that they can be honest with you, and if they can, improve on what they can do for you, they possibly could. So
yeah. Well said. Guys, thank you. We're at our time, like a comedian. We're at our time. That's my time. It's time for us to get.
That's it.
So yeah, guys. So once again, if you guys have any questions regarding anything, mortgage or real estate related, definitely tune in next week. And we're more than happy to answer any questions for you guys. So I hope you guys have a great week.
Have a good one.
Awesome. Happy belated Mother's Day out there to you ladies.